Welcome back, Investing Mutants. This week I'll be talking about two different companies, Shift Technologies and Adamas Pharmaceuticals, and my participation in the recent tender offer for that company. Check it out. Hey everyone, welcome back to another edition of my YouTube channel on special situations investing and my personal investing practice. As a quick disclaimer, this video is for educational purposes only. Any companies that I mention in this presentation are discussed solely for illustrative purposes. Discussing such companies and the specifics about them is to help educate me and educate you about certain special situations. It is not a solicitation to purchase them. I recommend that you conduct your own research and identify why you might want to own the company yourself prior to your committing of any funds. I also recommend that you seek the services of a financial advisor that has considered your personal situation as your fiduciary. And then finally, may your education here grow your knowledge, improve your personal investing performance, and give you the confidence to take control of your future. Thanks a bunch for watching. Now on to the video. Investing Mutants. So this week I had the final cash come out of my participation in Adamas Pharmaceuticals, and I just wanted to do a quick little post-mortem for you, and then we'll get into the meat of this video, which will be my discussion of Shift and some of the activity that's happened around that company. So Adamas Pharmaceuticals had a tender offer that went out for all of their shares as part of a merger, and the tender offer included a cash payout of $8.10 per share, plus 2 contingent value rights payable in December of 2024 and December of 2025 for 50 cents each. As talked about in the previous video, I purchased shares in this company and participated in the tender offer as I expected to do, and I purchased at $8.09 per share on average, including all the fees and everything else that's included, and then I sold at $8.10 a share as a participation in that company. And basically, this is one of those perfect examples, in my view, of Maurece Schiller transaction, where I haven't risked the actual principal. I've only risked the opportunity to get more cash in the future. And so basically, to me, this is a free lottery ticket. I went ahead and I have zero money risked, and basically that's a 100% return on zero or even more. So who knows, maybe it will be zero. And that is one of the risks that happens with contingent value rights. You should expect that sometimes you won't have an actual payout that comes from them, and as a result you have to just assume that sometimes you're not going to make any money off of them. But in this case, I think it's a good opportunity, and basically I'm getting it for free, so the optionality is definitely there for me. On to Shift. So last year I participated in Shift, the warrant transaction offer for the company, got a pretty good cash payout for it, and had a pretty good position. And then I did what I sometimes think is an issue that happens when you're in special situations. You find that you get a little bit too attracted to the company. And I went ahead and maintained my position in the company because I thought that it would be a good opportunity over time, and it performed well over the year, sometimes good, sometimes bad. But recently, the share price has dropped below $5 a share, and I think the most recent trading that I saw showed it close to almost $4 a share, which represents to me a moment, almost 50% loss, 50% loss on the company. That represents to me a moment that I need to say, okay, I need to reevaluate, is my thesis still correct? And so, although this is not due diligence, and if you want to do your own due diligence, that's part of the reason why I don't necessarily do a complete due diligence review of the companies that I talk about on this channel, because I think that if anyone wants to invest in these companies, they need to make their own decisions. I just want to give feedback and insight on how I look at things and some of the things that I try to do with my own investing. So let's dig in and look at some of the things that are occurring with Shift. With the share price that has been beat up as much as Shift has over the year, I thought that it would be good to review the reasons why, or some of the lessons that I've learned over this time. So number one reason why I think that the share price has dropped as much as it has over the past couple of weeks is that the lockup ended in November, the latter part of November, just before Thanksgiving. And this lockup, if you're not aware, any lockup is a requirement by the SEC that original owners of a company prior to IPO or prior to, in this case, SPAC conversion, those owners must remain invested in the company under a certain or during a certain amount of time. And the reason why this is done is this harkens back from my business school years. This harkens back to the time in the SEC when they were trying to regulate issues that happened around the Great Depression, where companies would be IPO'd, they'd be sold for hardly anything, and then the share price would crash as the original investors would dump the shares. And I think that is kind of what's happening post-lockup right now, is that a lot of people that had their initial investment as private investors, they're trying to get their cash out so that they can go on to another private investment. And so they're selling out in the public market. The share price is going to be lowered over this time, and it probably will be down for a little while. And that's part of the reason why I think I saw in a Reddit forum that some people were like, oh, we need to get into Shift because it's a short squeeze. And I think really the shorts were just anticipating that the lockup period would end, and so they wanted to go ahead and get in on the short side of that transaction. That being said, as often happens with investments, sometimes that as often happens with the end of a lockup period, sometimes this presents an opportunity to invest in it. My lesson learned on this one is that as a special situations investor, I was fully aware of the lockup period and fully aware of it in the IPO market. There's also, I should have expected to see it also in the SPAC industry, and I should have been more prepared for it on this time, and I should have been ready to purchase more shares. Fortunately, I continue to have, because of the nature of my investment, I have had a significant amount of cash that's available for investing at this time. And I'll talk about this a little bit later on, but you should be aware that I did purchase an additional maybe 50% of my purchase price on this company at the depressed levels at this time. Lesson number 2. Sometimes when you pick a company in a fractured and dynamic industry, or one that's being disrupted like Shift, then you are basically trying to pick a winner out of a bunch of different companies. And there's 3 different winners at this time, Shift being the smallest of the 3, and then the 2 largest competitors, Vroom and Carvana. When you attempt to pick a winner out of a company or out of a disruptive industry, sometimes you're only going to have 1 or 2 winners. And I mean, this is the example that we saw. Google came in and they basically just disrupted everything else that was in the industry. And this is going to happen with a technology company. I totally see that this is one of the risks that might occur with Shift. And I think sometimes people don't realize that this is a company that could be it could be beat out by its competitors relatively easily, based on the fact that Carvana and also Vroom are much larger, and they're also growing at a similar clip. That being said, I do expect that there is opportunity for all 3 companies to thrive. It's just the question of which one will be number 1, which one will be number 2, because in most industries, if you're not either in that number 1 or number 2 seed, you're probably not going to survive over the long term. And that puts Shift at number 3 at this time in size of revenues and the opportunity that is here. However, the growth of the company seems to be on a trajectory that may allow them to compete directly with Vroom and maybe kick them out of that second section. The third reason why I think the share price has changed the same over the last little while is due to valuation. And if you look at just various different areas, most of the things that you need to look at is an enterprise value to revenue ratio, or price to sales, or something similar to that, because this is a company that is pre-earnings, pre-cash flow, and so basically they're growing right now, to penetrate the market so that they can have the benefits of scale later on. And so Carvana's in the same situation, Vroom is in the same situation. All three of them have to deal with this. The enterprise value to revenue numbers for all of them are as follows. For Shift, and depending on where you get your information, it's going to change. This is just to make it quick and easy for people to look it up, and you can kind of see it. I looked at the enterprise value to revenue numbers that came off of Yahoo Finance. You don't have to use them. In fact, I don't recommend that you use them. I'm just using this as an example to help you understand the changes between the three on your own. The enterprise value to revenue for Shift is just under 0.6, and the enterprise value to revenue number for Vroom is 0.6 as well. However, Carvana is trading at 2.4 almost enterprise value to revenue multiple. So right now, Carvana is the clear winner, and the industry seems to be seeing this. And so really the trick is, in this one, are you picking Vroom or are you picking Shift? Which one do you think over time will be the better one? Obviously, from my bias, I'm looking at Shift as being the one that I think that will trend better over time. One thing to think about with Shift over the past year, their growth rate was extremely large. They grew almost 200% over last year's revenues, if they hit their projected returns that they're expected to hit by the end of the year, which is $620 million in sales. And I think that at $620 million in sales, I think that's a pretty decent or conservative enough number that I'm okay with it. That's what the CEO and the CFO said would be where it would be at the end of this next year. On one note, sometimes when you purchase a company, if you're purchasing it on an amount of sales, like a small business or anything like that, you usually typically try to buy a company at 1 times its annual revenues. And if you can purchase a company at 1 times its annual revenues, it's usually a pretty decent price. With that being said, at this time and at that multiple from Yahoo Finance, you're basically buying Shift at 60 cents on the dollar for a company that's growing rapidly. And more importantly, if you think about the rapid growth and what kind of projections you might have over the next year, I'm projecting, I think a conservative projection would be about 50% growth from this year to next, which puts their revenue terms somewhere just under $1 billion. And basically right now you're buying the company at basically $4.20 a share, let's say, and at that multiple, at 60 cents multiple, it should be worth closer to about $7.85 a share. And then if you extend it out to that growth rate for the next year, the company should be worth somewhere between $10 and $12 a share, with my high end looking somewhere around $12.80 a share. I really think that the company is worth a little bit over about $10 a share right now, or in 12 months. And so that's why I'm seeing this as an opportunity to purchase the company or buy more shares in the company at this time. Some of the risks that I think are involved with this, and I think that a discussion of risks with a company that's new and doesn't have an established track record, is definitely important. And I think that there are various risks that people should consider as they're investing in this. And the first one, and this is the one that I think is the biggest one, is that if you're picking winners in a disrupting industry, it can be difficult to pick the right ones, and it may result in a full loss of your capital. My position in Shift, including the recent purchases that I made, still only represents about 3 to 4% of my total overall net worth, and that means that it can be something that I can absorb the loss if I do lose money on this. Number 2, the second risk is that Vroom and Carvana have the upper hand in revenue generation, and at this time they dwarf Shift, making it so that they might be more likely to maintain that market share and that leadership over the industry compared to Shift. In my view, this will indeed be a David and Goliath story if Shift is able to take over versus Vroom and even perhaps one day Carvana. The third risk that I think is definitely possible over the next 3 to 5 years is that share dilution may occur if Shift is unable to get favorable terms as it's getting cash to finance its growth. And so if they're unable to sell new shares, and I fully expect share dilution. In fact, I expect about a 20% share dilution over the next 5 years at least, maybe even more. And with that type of share dilution, I do expect that the company will, it could lower our overall returns over time. With that being said, I don't know if I'm expecting that the share dilution will not be as much as it could be. The fourth major risk that I see is that automotive sales is in a cyclical industry, and that any type of economic downturn or people's inability to pay would definitely adversely affect any types of returns with this company. In summary and in full disclosure, I want you to realize that this is not due diligence. This is just my perspectives on the company, and I find that I just want you to kind of see where I'm coming from and why I think that the company is worth what it is at this time. With that being said, in full disclosure, I have added to my position. And again, like I said, it represents about 4% of my total overall net worth and about 10% of my portfolio. And as we are investing, realize that this is definitely something that may have bias involved in it because I am an owner and I've also made videos on it over the past. So thanks a bunch for watching, guys, and I appreciate your perspectives on this. If you have any thoughts on Shift, if you want to share them in the comments below, feel free. If you like the video, please go ahead and hit the like button. And then finally, I hope that you all have a wonderful December as you get ready for the Christmas holiday season, and we will catch you next week. Thanks a bunch for watching.